Good morning in the Mumbai News Center. I'm Sonal Bhutra and you're watching Power Breakfast. Those are the top headlines, and definitely we are waking up to positive cues from the Wall Street and the global markets as well. So let's take a look at what's happening in the Asian markets as of now. It's green across the Asian screen. We have all the indices in the green right now. Hang Seng is sitting with gains of 1.3%. The Taiwanese index is higher by 0.7%. There's Nikkei, which is sitting with gains of 0.6%. Kospi 2 is higher by 0.5%. All this is a positive handover that these markets have taken from the US markets, where we saw a massive rally led by a couple of sectors yesterday. As a result of all this, the SGX Nifty is indicating that the start for our own markets, well, that could be in the green. 132-point uptick is what the SGX Nifty is indicating. Remember, we did not follow the global markets yesterday. We did see our markets closing in the green, so there could be another day in the green today as well. And in the US market, stocks fired up in a broad-based rally on Monday, with the Dow Jones surging nearly 2%, the S&P 500 over 2.5%, and Nasdaq Composite, the day's outperformer, rallying over 3%. CNBC's Sarah Eisen gets a wrap of all the action on Wall Street.
Stocks closing the day higher across the board after strong bank earnings helped fuel a relief rally. But big moves in both directions in recent weeks have fed uneasiness on Wall Street. The Dow closing the day up nearly 2%. The broader S&P 500 rising just over 2.6% for the day. And then the Nasdaq, the big winner of them all, up over 3.4%. Shares of News Corp rose while Fox shares fell as investors weighed the possibility of Rupert Murdoch's media companies recombining nearly a decade after they split. On Friday, the companies announced they were exploring a merger which would consolidate Murdoch's leadership over Fox News, sports, and business channels with his control of News Corp properties, including the Wall Street Journal, New York Post, and HarperCollins. And Goldman Sachs CEO David Solomon is planning his third major corporate reorganization since assuming the role back in 2018. The reorganization plan calling for Goldman's 4 main divisions to be combined into 3. That's the action from the U.S. market. Back to you in Mumbai.
Okay, all right, that's the US market update, but let's focus on some important banking earnings as well. Bank of America's third quarter results topped expectations. The bank reported better than expected fixed income trading and gains in interest income. Bank of America Chairman and CEO Brian Moynihan spoke to CNBC's Sarah Eisen. Let's listen into excerpts from that exclusive conversation.
It had 2,000 to 5,000 before the pandemic, an average of 3,400. They're sitting with 13,000 account, and it's not going down. It continues to be flattish, and it was growing early in the year. Now it's flat. That means they have money to spend. And then on top of that, they're employed, and you can see the unemployment numbers are still very low. So you put that all together, the current environment of consumers is quite good and strong. So our reserves that we put up this quarter are built on a 5% unemployment in the fourth quarter of 22 and a 5.5% employment all during 23. That's how conservative the reserve building. We put up those reserves already. So the idea is that the way the rules work and accounting works and everything, you're putting up based on scenarios, and our scenarios, weighted 40% to very adverse scenarios, which have high inflation and high unemployment built in. And when you average those together, the reserve is built on 5.5% unemployment. So we are prepared for the hurricane. We're prepared for whatever happens next.
Okay, all right. Let us also listen into some important market opinion coming in from Morgan Stanley's Mike Wilson.
We do not think this is a cost-push inflation. It's a demand-pull inflation. It's very serious. We actually called for that back in 2020. It played out in a positive way initially with earnings, being the beneficiary of that, stocks also benefiting from that. But now we're in a bust, and that bust is not fully played out. So, yes, we think the earnings recession and probably an economic recession at some point will play through, and that's not fully priced. We haven't seen the things that we need to see to call the end to this bear market, which is fundamentally driven.
Okay, that is some expert opinion coming into the final update on our global market wrap now. This morning, European markets began the week on a strong footing, with the French CAC and the German DAX surging over 1.5%, while the British FTSE closed with a 60-point gain. UK Jeremy Hunt, the new British finance minister, has scrapped almost all the planned tax cuts announced in the Truss government's mini-budget last month. The move sought to soothe the markets that saw a broad-based sell-off after Hunt's predecessor, Kwasi Kwarteng, announced historic unfunded tax cuts. CNBC's Arabelle Gumede filed us this report from London.
The message is certainly clear that economic stability needs to be a part of the foray here. And that is exactly what Jeremy Hunt, the new UK Finance Minister, the freshly minted UK Finance Minister who has been in office then since Friday, has tried to do, has tried to alleviate the market, putting through around £32 billion of what he calls savings effectively to the fiscal balance sheet. That's around $36 billion, that is. And the interesting elements here and the different parts of it are certainly around taxes, which continue. That means basic income tax will still remain at around 20% or so. The corporate tax, which they had announced just last week, in order to not raise that will now still be raised to that initial 25%. Jeremy Hunt saying then that it is unfair to borrow money in order to fund these tax cuts, even though he still believes in having competitive taxes, as it were. Certainly some of the notes also coming out from the Office of the Treasury, that is Jeremy Hunt's office then, saying then that Truss's spokesman has said that the Chancellor said that he will meet with all secretaries of state this week to decide on the future spending plans, which will then be submitted to the Office for Budget Responsibility, which will happen on Friday. Of course, that was an element of that mini budget that was put out on September the 23rd that was not followed through, and the market felt that that undermined the Office for Budget Responsibility, which would have then put forward a sentiment on whether it was feasible to put through those unfunded tax cuts.
Okay, that is all about the UK market update and the global market action as well. But how will these overnight cues impact our own market? We have a research team joining us. It is our Power Prep segment. They will tell us all about the market cues, the stocks that are likely to be in the news, and the action from the F&O space as well. Hey guys, a very good morning to all of you. First up, Vivek is joining us to tell us about all the market cues that we will be focusing on today. Vivek, good morning.
Well, good morning. Finally, after quite a few trading sessions, we are actually starting off today's note most likely on a strong footing on the back of very strong global handover. And, this is something that's a bit of a positive surprise given the fact that, last couple of trading sessions, in fact, even last week, you actually saw quite a few sessions where the handover was quite weak. The U.S. markets continued and gave a very strong close as well. And this was on the back of the fact that quite a lot of the U.S. banks that reported their earnings were much above what the street was anticipating. And this led to quite a bit of a buying activity along those, those banks especially. The European markets, if you're talking about it, most of them ended with strong gains on the back of the fact that, as you mentioned earlier, that, some of the proposed tax cuts and some of the proposed policies in the budget were being rolled back, and this is something that the markets took quite a bit of heart from. Coming to gold prices, especially, they closed higher by 1%, and this was after the gold price actually saw a significant multi-month low, and this was on the back of the fact that both the US dollar as well as yield actually eased off quite significantly from their recent highs. When you're talking about crude prices, fortunately, you actually saw crude prices ending largely unchanged, however, with a slight positive bias. Coming closer to Indian markets and what exactly will drive, of course, the whole host of results that we saw, especially some of the larger NBFCs yesterday, and today some important earnings as well that will come in. You're talking about L&T Tech, KPIT Tech, ICICI Lombard, Polycab and Tatacom, all of which would be declaring their results today. And finally, Asian markets, when you're talking about it, are started off today's trading session on a very strong footing, and SGX Nifty is indicating a strong gap-up start as far as the Indian markets are concerned.
Okay, all right. Thanks a lot for that, Vivek. Vivek spoke about some stocks, but there are more in the news. Surbhi is joining us with all that. Surbhi.
Few stocks on my radar today that came up with their Q2 earnings. The first one is RPG Life Sciences, where there was a strong revenue growth of 20% and margins came in at 22%. That was led by the domestic formulations business and the API business. Canfin Homes, where the NIM declines sequentially but remains healthy at 3.5%, and the AUM is up nearly 22% year-on-year and 5% sequentially. Spandana Sphoorti, where the company returns to profitability but the stress rises. The disbursals are up nearly 5.4% sequentially. Tata Coffee, the revenue is up 31% but margins take a hit at 11.4% versus 19% last year. Maharashtra Seamless, strong results there. The revenue saw growth of 48% and margins came in at 17.4%. Tata Metallics, weak set of numbers. Even though the revenue grew by 36% year-on-year, the EBITDA was down 59% year-on-year. Adani Transmission, that came in with their Q2 provisional business update, where in their transmission business, they added 352 kilometers in their operational network, and in the distribution utility segment, they saw a 13% year-on-year growth, and they sold 2,233 million units. Concor, they came in with their operational numbers as well. The total units was up 17% at 11.43 lakhs this quarter. And lastly, Aster DM, where the company enters into a joint venture with a Riyadh-based company to manage and operate pharmacy chains in the Kingdom of Saudi Arabia.
Okay, that is a long list of stocks in focus today, Surabhi. Thank you so much for that. Finally, going across to Mangalam, joining in with all the cues from the F&O space. Hey, Mangalam.
Good morning. So yesterday the Nifty actually closed near day's high, and now the SGX Nifty is indicating that there would be a big bump up at the start to the tune of almost 120 odd points, 135 as we speak. The important part, however, is that, the previous two trading sessions, we had the Nifty close at the low point and the SGX Nifty was indicating a dip. That dip was bought yesterday. Now the question is, on the other side, will this bounce after having seen a bounce yesterday, anticipating a bounce in the US, will be sold today or not? For that, we'll have to monitor the first hour in particular. What took place that caused that bounce in yesterday's trading session? A bunch of things. The FIs sold just about 372 crores in the cash market. DIIs went ahead and bought 1,600 crores. So that meant that the net inflows was 1,200 crores, higher than what we saw in the recent past as well. Even in index futures, there was mild long positions being added by FIIs and some short covering, as a result of which their shorts have now gone down from 77% to about 76%. 24% of their positions are on the long side. Remember, just a few days ago, the shorts were around that 85% mark. However, the data point that really stands out, they've bought more puts, but they've sold 1.4 lakh puts. And that's telling you that there is strong support that one expects at the lower level, and that support has risen from 16,950 to around that 17,100 mark. Why do I say that? Because 17,200 put added close to around 17 lakh shares in open interest. We had 17,100 put adding around 26 lakh shares in open interest as well. And the put buying actually took place only for an adverse event if the Nifty was to break that 200-day moving average on the downside. On the way up, the SGX Nifty is indicating a start around that 50-day moving average. So let's see whether we conquer that or not. But all dips towards the 20-day moving average should be considered as buying opportunities. The Nifty Bank, firm support, 600 points from here, where we are, 39,250 to 39,300, where we have both the 50 and the 20.
Welcome back. Well, India has sufficient grain stocks well above the minimum buffer norm, says Food Corporation of India Chairman Ashok Kumar Meena. Speaking to CNBC TV 18's Abhimanyu Sharma, FCI Chairman said paddy procurement this year has been more than that in the same period last year. He stopped short of saying anything about potential export curbs. Listen in.
The FCI stocks of Central Pool are sufficiently above the minimum buffer norms as well as operational requirements for meeting the needs of the country. The initial indication shows that the amount of procurement which has been done till yesterday, if we compare it with the corresponding period of last year, it is more than that, and we hope that the procurement will proceed smoothly and we will get the required amount of food grains, not only to meet our buffer requirement and operational requirement, but also meet the target set by the government.
Okay, that is the word coming in from the FCI. Moving on to some stock-specific news now. Sources say that Invesco, the largest shareholder in Zee Entertainment, will sell some stake in the company via block deals. Nimesh, who alerted about this in his D Street chatter last week, joins in now to tell us more about the same. Hey, Nimesh, good morning.
Hi, Sonal. Good morning. So finally, there is a block happening in Zee Entertainment, and as you rightly pointed out, Invesco is looking to sell 5.5% stake via block deal today. The indicative price is between 250 to 263, but my understanding from sources is that most likely the deal will happen in the block window in pre-open. So that's something to track in the morning trade. Now, Invesco owns little over 10%, so 10.15% stake in Zee Entertainment, and they are selling 5.5%. The remaining is locked up for 180 days. So looks like technically this is a clean out trade, because in the next 6 months there is a very high probability that the Zee merger will go through and the new entity will get listed by mid of Jan. Suppose that any which ways, because of the base going up, the Invesco stake will fall down further, and that's the remaining stake left. But at least after today's block deal, there is a 180-day lockup. So for the next 6 months, there cannot be further supply, and hence I think the stock will, after the initial reaction, may end up in the green. So big block in Zee Entertainment, and Invesco is selling 5.5% stake today.
Okay, so that is about Zee Entertainment. But Nimesh, hold on. Some big block deal which is expected in Samvardhan Motherson as well. That is what sources are suggesting. Tell us more.
That's right. Again, there is a large block deal. One of the large FII owns close to 3.5% stake in the company is looking to sell close to 2% stake. The floor price indicated is 64 rupees, which means up to 7% discount to yesterday's closing price. Again, in this particular block, there is a 90-day lockup for the seller. So for the next 3 months, they cannot sell the remaining stake. As I said, they own 3.5% and they are selling 2% stake via today's block deal. So maybe because of the deep discount and the fact that there is a 90-day lockup, you might see a bit of red on the stock. But the fact is, there are going to be 2 large block deals, one in Zee and one in Samvardhana International.
Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. As promised, let's get in Manisha Gupta, who's joining us with all the update from the commodity market. Some action in gas prices as well, Manisha, today.
Oh, well, yes, 7% of a decline overnight in the U.S. gas prices as we continue to see increase in the domestic inventories and production as well is weighing on. And then apart from that, it's the forecast of the mild winter above normal temperatures, which also means that the demand is not so great, and that has led to a lot of premium off the prices. Not just the U.S. gas, Europe and UK gas prices have continued to decline as well, and we're looking at 3 to 5% of a cut into those as well in the overnight markets there. The other area that continues to decline is the metal prices. Yet another day when you are looking at copper, aluminum, zinc prices continue to decline. The Chinese zero COVID policy continues to weigh. And also the data or the statements from Rio Tinto suggesting that they are looking at weak iron ore shipments amid weak global industrial activity is something that's weighed on iron ore prices for sure, but across metal prices where we are seeing Asia start on a weak note.
Okay, all right. Manisha, thank you so much for joining us. That's all that's happening in the commodity markets. But the SGX Nifty, if we look at it now, is indicating the start for our own markets could be well in the green. It's a 135-point uptick that one is suggesting. And with that, it's a wrap on this edition of Power Breakfast. But as we wind up, here is some investment advice from Nirmal Jain of IIFL.
While, the market is always like a pendulum, it can swing on optimism a little bit on one side too much. But if you have a long-term approach, then I think Indian equities will do well because the fundamentals are strong. The short-term will remain volatile. But India has unique opportunity to maintain the growth, with the impact of, say, currency or inflation may be moderated down from 8 to 7. But it still stands out in this world where no other country is growing, even China will find it difficult to maintain 4% growth.